It is tax time, and if you are self-employed, an independent contractor, or own a small business, you most likely are looking for the most important money-saving business deductions and credits that you can use to lower your taxable income and save money on your income taxes. I'm going to go through an ultimate list of over 30 self-employed and small business tax deductions and credits, so that you can make sure that you know what to look out for, what receipts to prepare for your taxes, and how to save the most money in self-employed business tax deductions and credits this year. Number one are employee salaries and benefits. If you own a business with employees, you can deduct the wages and salaries that you pay them as a business expense. This deduction also applies to bonuses, commissions, and other forms of compensation, provided they are reasonable and directly related to the work performed. In addition to salaries, benefits such as health insurance, life insurance, and education assistance can also be deducted if they are offered as a part of an employee benefits package. Number two is depreciation. Businesses that purchase equipment, machinery, furniture, or vehicles used for their business can deduct their cost over time through depreciation. The Section 179 deduction allows businesses to immediately deduct the full price of qualifying equipment rather than spreading the cost over several years. This is particularly beneficial for businesses that make large capital investments, such as upgrading office computers, purchasing manufacturing machinery, or acquiring business vehicles. Number three is rent for office space or equipment. If your business rents office space, warehouses, storefronts, or equipment, these expenses are fully deductible. Many businesses lease space instead of buying property, making this one of the most commonly claimed deductions. The deduction applies whether you lease a building from a landlord or rent co-working space. Equipment rentals such as heavy machinery or temporary office technology also qualify for deductions as long as they are used exclusively for business purposes. Number four is business vehicle expenses. If you use a vehicle for business purposes, you can deduct expenses such as fuel, repairs, maintenance, depreciation, and insurance. The IRS allows two methods for claiming this deduction: the actual expense method, which requires tracking all vehicle-related expenses, and the standard mileage rate, which calculates deductions based on miles driven for business purposes. Personal commuting expenses do not qualify, so it is important to keep detailed records of business mileage. If a vehicle is used both for business and personal reasons, only the portion of the expenses directly related to the business is deductible. Businesses that lease vehicles may also deduct monthly lease payments under specific conditions. Number five is utilities. Utilities necessary for business operations such as electricity, water, and internet service are deductible expenses. This deduction applies to traditional office spaces, rented locations, and home offices, although home office deductions may be subject to additional rules. Businesses that rely on cell phones or landlines for communication can also deduct a portion of these costs if they are used primarily for business purposes. If a phone or internet plan is used for both business and personal reasons, only the business-related portion can be deducted. Number six is advertising and marketing expenses. Businesses can deduct the full cost of advertising and marketing efforts, including online ads, billboards, business cards, and promotional events. This deduction also covers website development, SEO services, social media advertising, and email marketing campaigns. If a business sponsors local events or donates advertising space, these expenses may also be deductible under specific IRS guidelines. Number seven is office supplies and software. Common office supplies such as pens, paper, printer ink, postage are deductible when used for business purposes. Software expenses, including accounting programs, design tools, and productivity apps, also qualify. Subscription-based software services such as cloud storage, customer relationship management, CRM tools can be deducted annually as long as they are used for business operations. Number 8 is professional services. Payments made to attorneys, accountants, business consultants, and other professionals are tax deductible if they are for business-related services. This includes costs for preparing legal contracts, handling tax filings, and seeking professional legal advice on business operations. Number 9 is business meals and entertainment. A business can deduct 50% of meal expenses when dining with clients, employees, or business partners, providing that the meal is directly related to business discussions. Meals provided for company-wide meetings or travel-related meals may also be eligible for deductions. The IRS requires proper documentations of these expenses, including receipts and details about the business purpose of the meal. Number 10, interest on business loans and credit cards. Businesses that take out loans or use credit cards for business-related expenses can deduct the interest paid on those accounts. This applies to bank loans, lines of credit, and even business-related mortgages. The IRS requires that the loan be officially in the business's name to be eligible for deductions. Number 11 is travel expenses. Business travel expenses, including airfare, hotel stays, rental cars, and meals, are deductible as long as they are necessary for conducting business. This includes attending conferences, meeting clients, or scouting new business locations. The IRS requires that the travel be primarily for business purposes, and any personal activities during that trip should not be included in the deduction. Number 12, home office deduction. Self-employed individuals or business owners who use a part of their home exclusively for business may qualify for the home office deduction. The IRS offers two methods for calculating this deduction. The simplified method, which allows the standard deduction of $5 per square foot up to 300 square feet, and the actual expense method, which requires tracking direct and indirect expenses such as rent, mortgage, utilities, and repairs. To qualify, the space must be used regularly and exclusively for business. Number 13, education and training costs. Businesses can deduct expenses related to education and training that improve employees' skills and maintain professional certifications. This includes the cost of attending seminars, workshops, online courses, and industry-related certifications. Employers can also deduct the cost of books, training materials, and tuition reimbursement programs if they are offered as a part of the employee benefit. Number 14, insurance premiums. The cost of business insurance is fully deductible, including general liability insurance, property insurance, workers' compensation insurance, and professional liability insurance. If a business has employees, health insurance premiums paid on their behalf may also be deductible. Additionally, self-employed individuals may deduct their own health insurance premiums, though restrictions do apply. Next is the self-employment tax deduction. Self-employed individuals must pay both the employer and employee portions of Social Security and Medicare taxes, totaling 15.3% of net earnings. However, they can deduct 50% of this tax as an adjustment to income, reducing their overall taxable income. Qualified Business Income Deduction, QBI. The QBI deduction allows eligible self-employed individuals and small business owners to deduct up to 20% of their qualified business income. This deduction is available to pass-through entities, including sole proprietorships, partnerships, S-corps, and LLCs taxed as pass-throughs. However, it is subject to income limits and restrictions based on the type of business. Health savings account contributions. Self-employed individuals with a high deductible health plan, HDHP, can contribute pre-tax income to a health savings account, an HSA, reducing their taxable income. The funds in an HSA can be used to pay for qualified medical expenses such as doctor's visits, prescriptions, dental care, without being subject to income tax. Business bank fees and merchant processing fees. Small business owners and self-employed individuals often pay associated fees with maintaining business bank accounts, such as monthly maintenance fees, overdraft charges, and wire transfers, all of which are tax deductible. Merchant processing fees from credit card transactions, PayPal, Stripe, and other payment processors are also deductible since they are necessary business expenses. State and local tax deduction. Small business owners can deduct certain state and local taxes, such as sales tax on business purchases, business property tax, and licensing fees required for operation. Domain registration and website hosting fees. Businesses that operate online or maintain a digital presence can deduct expenses related to website maintenance, such as domain registration fees, website hosting, and cybersecurity protections. Subscriptions and industry association fees. Membership dues for professional organizations, trade associations, and industry-specific publications can be deducted as long as they are related to business operations. Charitable contributions for corporations. Small businesses structured as C corporations can deduct charitable donations made to qualified nonprofit organizations. These contributions must be made to IRS-recognized 501c3 organizations to qualify for the deduction. While sole proprietors and pass-through entities cannot deduct charitable contributions as business expenses, they may be able to claim them as a personal deduction if they itemize. Patent and trademark costs. Businesses that develop unique products, inventions, or branding elements can deduct expenses related to obtaining and protecting their intellectual property. These include filing fees for patents, copyrights, and trademarks, as well as legal costs associated with securing and defending these rights. Lastly is the bad debt deduction. If a business extends credit to customers who fail to pay, uncollected amounts can be deducted as bad debt. This applies to unpaid invoices, loans to clients, and even unfulfilled contracts. Businesses must show that they made reasonable attempts to collect the debts before writing it off. Small business health care tax credit. Small businesses that provide health insurance to employees may qualify for a tax credit covering up to 50% of premium costs, or 35% for nonprofits. To be eligible, the business must have fewer than 25 full-time equivalent employees and pay at least 50% of employee-only premiums. Next, startup costs and organizational expenses. New businesses can deduct up to $5,000 in startup costs, which includes legal fees, market research, advertising, and travel expenses related to launching the business. Another $5,000 can be deducted for organizational expenses such as business formation, fees, and accounting setup costs. Number 15, Work Opportunity Tax Credit. Work Opportunity Tax Credit, WOTC, is a federal incentive for businesses that hire individuals from targeted groups facing barriers to employment, such as veterans, ex-felons, and long-term unemployed individuals. The credit is based on a percentage of the first-year wages paid to qualifying employees, with a maximum credit of $2,400 per eligible hire. To claim this credit, businesses must obtain certification from their state workforce agency. This credit was extended through 2025 under the Consolidated Appropriations Act. Number 16, Research and Development Tax Credit. Businesses that invest in innovation, such as developing new products, software, or processes, may qualify for the Research and Development Tax Credit. This credit applies to businesses in all sizes and is designated to encourage technological advancements. Eligible expenses include employee wages for R&D activities, materials used in research, and costs associated with prototype development. Number 17, Retirement Plan Startup Cost Tax Credit. Small businesses that establish a retirement plan, such as an SEP, a simple IRA, or a 401k, may qualify for a tax credit covering 50% to 100% of startup costs, up to $5,000 per year for 3 years. To qualify, the businesses must have had fewer than 100 employees, with at least one being a non-highly compensated employee. Number 18, plug-in electric drive vehicle credit. Businesses that purchase a new plug-in electric vehicle may be eligible for a tax credit of up to $7,500. The vehicle must have a gross weight under 14,000 pounds, an external charging source, and be manufactured by a company that has sold fewer than 200,000 electric vehicles in the United States, purchased after August 16, 2022. And it must undergo final assembly in North America to qualify. Number 19, Empowerment Zone Employment Credit. An empowerment zone is an economically distressed area that has been designated by the government. Businesses that operate in designated empowerment zones can claim a tax credit of up to $3,000 per qualified employee who lives and works in this zone. This credit is intended to encourage economic growth in struggling communities. There's no limit in the number of employees a business can claim under this credit. Natural disaster tax relief. Businesses affected by federally declared disasters such as hurricanes, wildfires, and floods may qualify for tax relief. This includes extended filing deadlines, deductions for property losses, and expedited refunds. The IRS provides special forms for claiming disaster-related losses and deductions. Next up is the Disabled Access Credit. The Disabled Access Credit provides financial relief to small businesses that incur costs to make their facilities more accessible to individuals with disabilities. Businesses with total revenue under $1 million or fewer than 30 full-time employees may qualify for this credit, covering 50% of eligible expenditures up to $10,250. Next is the Family and Medical Leave Credit. Businesses that provide paid family and medical leave to employees may qualify for a tax credit ranging from 12.5% up to 25% of the wages paid during the leave period. To qualify, the business must offer at least 2 weeks of paid leave at a minimum of 50% of the employee's regular wages.